it's going to be pretty tight. But you can't really judge the polling day because, there's been elections where the polls have been completely wrong. When Scott Morrison won, when John Howard won, the polls never indicated that they would win, so it's anyone's race, I think.
As early voters start heading to the polls, the election outcome is looking as unpredictable as the current state of financial markets. In the days and weeks after next Saturday's result, will the investment backdrop become any clearer for Australia? Hello, I'm Chris Bourke and welcome to the Bloomberg Australia podcast. The election is just days away, but one thing continues to weigh on Australians' minds more than anything else. You guessed it, Donald Trump. The US president's erratic tariff drama has drowned out much of the debate and instead made Australians more anxious as turbulent stock markets shake up their super fund balances. But let's not forget, there are some policy changes being proposed by both Prime Minister Anthony Albanese and Coalition leader Peter Dutton. And some of those policies could potentially impact stocks, the Aussie dollar, and investments you may not have even thought about. To discuss all this, I'm pleased to welcome back Bloomberg's Melbourne-based cross-asset reporter, Richard Henderson.
Hello.
Rich, have you cast your vote yet?
Not yet, no. I'm going to wait for the big day.
Well, I guess you haven't had a lot of time to get in that early voting with all those daily market swings and roundabouts keeping you very busy right now.
Exactly. You can barely step away from the terminal.
Can you, first of all, just give us an overview of what stock markets are looking like right now and what the biggest drivers of that are?
Well, we're still caught in this huge volatile moment, and the Australian election is happening really at this momentous time for globalization, for capitalism around the world. Donald Trump's tariff agenda threatens to rewire global trade, and that has a huge impact for many countries around the world, including Australia. China, Australia's largest trading partner, is one of the biggest concerns. We still don't have a deal between China and the United States on trade. We might not have one for a long time. We don't know. There's so much uncertainty. And so that's really weighing on stock markets around the world, including in Australia. So it's really important to keep that in mind until those big global pressures are resolved in some way. The volatility we're seeing may well continue regardless of the outcome for the Australian election.
Yeah, that's a really good point. I'm not sure I can think of a more turbulent time, well, not in recent history anyway, when for an Australian election backdrop. Okay. Rich, I want you to imagine that it's Monday morning of May the 5th. You're heading into work bright-eyed and bushy-tailed as usual, and you know who's won the election. If it's Labor, what can we expect to see in terms of market moves, and what about the Coalition?
There's a really good body of evidence that shows, on the margins that during a campaign, investors sort of enter this holding pattern, markets enter this holding pattern, and then once you get a result, there's more clarity, and on that Monday, there's a bit of a bounce. The differences in policies are quite specific. So there's no huge gaping gap in terms of the anticipated financial market reaction between either party. But there are quite a few interesting specifics and some things that are even shared. For instance, the support for gas output by both of the major parties will probably offer some support to providers like Woodside and Santos. On the property front, there's support for house building and spending on that. So that could support companies like Mirvac or Stockland or Lendlease, according to Bloomberg Intelligence, some work that's been done there. And also on the banking side, there might be support for loan growth if we get that clarity of a result. So there's a few different dynamics at play here that separate the parties, but also that they share. Renewables, the question mark over nuclear energy is another one. Obviously, the coalition offering this idea about nuclear energy that could walk back some of the progress made on renewables that would hurt companies operating in that space, and potentially banks that lend to renewables projects as well.
Yeah, you made the all-important point back there. If we get clarity of a result, which doesn't always happen. Many people are predicting a hung parliament where no party has a sufficient majority to form government, instead has to negotiate with smaller parties or independents. What tends to happen in these situations, markets-wise?
Well, that kind of outcome has been described by Shane Oliver at AMP Capital as the greatest risk facing investors in this election. As you've identified, the elevated power of smaller parties will enable them to push through their own agendas, and that could lead some to walk away from some of the reforms in terms of productivity that many are hoping to see. Also, in the example of Labor requiring support from smaller parties, that is broadly seen, at least by AMP Capital, as being less business friendly, which could hurt markets on the margins. But again, the outcome of a hung parliament would not be very welcomed by financial markets because of that lingering uncertainty and also a less clarity on the policy agenda.
Yeah, and those negotiations can go on for weeks, which is not particularly helpful in this environment, I would imagine. Which of the two main parties have traditionally seen the strongest stock market growth when being in government?
This is such a wonderful question. It's a very vexed question because, just like on that Monday when we know the results or the absence of a result where there's some clarity, financial markets are so responsive to what's happening around the world and, Donald Trump, et cetera, that it's very hard to make grand pronouncements over, the stock market does better under the coalition or under Labor. That said, the evidence does point to coalition being, to the stock market performing better under the coalition. Data from Bloomberg Intelligence from 1980 shows that the Australian stock market has risen 10% on average each year under a coalition. In the year after a coalition victory versus 7.5% under Labor. But it's really difficult because, if you think back to the global financial crisis, that was Rudd and Gillard. Obviously, they didn't really have any impact on the crisis, but they weathered the symptoms of that in terms of markets falling, and the same for Gough Whitlam with the oil crisis in the early 1970s, which hurt financial markets. So it's a bit of a vexed question, but the data does point to the coalition supporting the stock market more than Labor.
That's really interesting, those stats. Do we know why? I mean, is it just the case that the coalition is perceived as more business friendly, or is there something a bit more scientific? I think
really it is to do with the global environment, and it doesn't really have a huge reflection on. It isn't a huge reflection on the domestic policies.
Right.
One outlier, for instance, is the Hawke-Keating government. The Australian stock market went up more than 17% per annum under that government, according to AMP Capital data. So, that really kind of disproves the theory in a way that Labor is less business friendly or less markets friendly. And that was a very reformist government, of course. So it's a very tricky data set to get a really strong grip on. And again, it really is influenced by all these other factors overseas.
Yep. When we come back, what else should you be closely watching after next weekend's result? Welcome back to the Bloomberg Australia podcast. You're here with me, Chris Bourke, and I'm talking to Rich Henderson, our cross-asset reporter based in Melbourne. We're talking about how we can expect stocks and other investments to react, or in some cases not react, to the results of the May 3 election. Rich, I know we're Bloomberg and we're all about financial markets, but I would love to know, what are the current odds at the betting shop of Albanese winning versus a Dutton victory right now?
I've actually just looked these up, and I was actually shocked. One of the preeminent betting companies in Australia, the odds they're giving is $1.20 for victory for Anthony Albanese to become the next Prime Minister following the election, against $4.50 for Peter Dutton and a coalition victory. So it's a very, the betting odds are basically saying Albo is a lock. There's a separate odds I've looked at from a different company that are available on the Bloomberg terminal. They're showing an 83% chance of victory for Albanese versus 15% for Peter Dutton. But you've really got to take these numbers with a big pinch of salt because there is quite a compelling body of evidence showing that single bets or small group of bets can have a big impact on these numbers. They can really distort them. And so they shouldn't really be relied upon. These are not polls. These are not pollsters going out and asking people, who are you going to vote for? These are bettors, gamblers trying to make money on the outcome, and the odds reflect the number of people betting and the direction of those bets. So very tricky to get a read, but I was really surprised at the certainty these betting odds are showing.
Yeah, those odds are something else. Have you placed your bet?
No, I'm definitely not a gambler.
Okay, let's move on to bets that you're a bit more familiar with. The Aussie dollar. It's been on a roller coaster ride in the past month or so. What's going on there, and can we expect the election to impact that at all?
Well, this is another great example of those outside foreign influences taking precedence over any election-related impact on an asset or a currency in this case. The dollar, the Australian dollar, is really responsive to all the uncertainty that's coursing through the globe right now regarding trade and tariffs from the United States. And so we've seen some dollar weaknessing, some dollar weakness rather, some strength in the US dollar. Really, it's going to be a reflection of Australia's place in the world and, potentially some weakness from tariffs hitting Australia or tariffs hitting China that weaken the Australian economy by extension. But also there's some benefit potentially to the Australian dollar by investors turning away from the primacy of the US dollar. Its status as a reserve currency, a haven in times of uncertainty, has been eroded a little bit in the last few weeks as Donald Trump has engaged in this trade war. And also, he's walked back these comments, but he did take aim at Jerome Powell, the chairman of the Federal Reserve, and threatened at one point to fire him, or at least said he was considering this. This sent a real shockwave through global financial markets. Investors got a bit nervous about the independence of the Federal Reserve, and that's a really big deal for investors. And so that weakened the dollar. Trump has walked those comments back, but that's some of the crosswinds that are making any read on the impact on the Australian dollar very hard. But again, these are global impacts that are taking precedence over anything domestic or election-related in Australia.
Yeah, and government bonds have been a big part of the story as well. Yeah, yields have been jumping all over the place amid Trump's tariff drama. Does the Australian election factor into any of these moves, do you think?
Not so much the election, but these are really important assets, investments to keep an eye on. One thing that is front of mind for investors now with all these trade tensions, et cetera, is that if we do see recession, global recession, a slowdown in growth, then the RBA, the Reserve Bank of Australia, will have to cut rates. This is a very almost mathematical function. It will need to trigger some sort of growth in Australia, and obviously rates are elevated because inflation is still an issue that they're tackling, but that is a mechanism by which the RBA can try and support growth in Australia. So we may get rate cuts if we do see the trade war last a while and these global trade relationships reform. So we could anticipate some more rate cuts and faster cuts in a scenario where growth starts to slow.
Okay, so there, as you say, there are plenty of investments to be keeping our eye on in the coming days and weeks, but any real moves from the election, I guess, will come from a shock result or a messy hung parliament that could take weeks to decide.
I think so, yeah. And I think another key point is that, because Trump is having such a big impact on financial markets, because he's trying to refashion some of these really key relationships between the United States and its top trading partners, whoever wins the Australian election, whether it's Peter Dutton or Anthony Albanese, they will have to deal with this. They will have to really find a way of navigating through this uncertainty, whether that's from the relationship with the United States, that diplomatic relationship, or whether we see a big slowdown in China and they have to try and keep Australia on some sort of growth trajectory. That's going to be such a big challenge. So I think that's a really important thing to think about when we think about the impact of the election and the result.
On that note, are there any investments out there that are Trump-proof?
Wow, that is a very good question. Gold has been incredibly Trump-proof these past few weeks. We've seen, successive record highs in the gold price. That's obviously a traditional haven asset. That's a reflection of all this uncertainty. So that's one that comes to mind instantly. Stocks have been whipsawing around. They haven't completely tanked, and investors are hoping for some reprieve there. So we could see a bounce in stock prices in the US that could flow into Australia. But it's very hard to read through some of these crosswinds.
Okay. Thank you, Rich Henderson. And thank you for listening to the Bloomberg Australia podcast. I'm Chris Bourke. This episode was recorded on the traditional lands of the Wurundjeri people of the Kulin Nation. It was produced by Paul Allen and edited by Ainsley Chandler, Rebecca Jones and Adam Hay. Don't forget to follow and review the show wherever you get your podcasts and sign up to Bloomberg's free daily newsletter, Australia Briefing. Go to bloomberg.com to subscribe.